Welcome to Simple Investing Secrets, your trusted destination for uncovering the finest stocks to buy and discovering cutting-edge investment strategies to build enduring wealth. In today's video, we'll take a deep dive into 9 must-buy high-yield dividend stocks for 2023. You'll get expert insights and investment tips to maximize your portfolio's returns. For those who desire not just a steady income, but also a robust foundation in their portfolios, these dividend stocks act as a shield against the ever-present market volatility and offer a potential path to financial growth that every investor seeks. So before we begin, we kindly request that you like this video and subscribe to our channel for weekly updates. Let's get started. As we enter the intriguing world of dividend stocks, we'll explore how they serve as an alluring oasis for those who value stability and consistent income in the intricate tapestry of financial markets. This quest for high-paying dividend stocks takes on even more significance in the year 2023, as we anticipate the ebb and flow of market dynamics amidst economic uncertainties. These dividend stocks are more than just potential income generators, they represent a dependable stream of dividends, akin to buoys in the unpredictable sea of financial fluctuations. Their allure is particularly compelling during times of market ambiguity, as dividends, those regular payments from businesses to their shareholders, stand as a beacon of stability and a direct link between a company's success and the investors who fuel its growth. In this comprehensive exploration, we'll examine the 9 highest-paying dividend stocks in 2023, each offering a unique narrative woven from their respective industries, challenges, and opportunities. From the realm of insurance to the energy sector, from telecommunications giants to financial powerhouses, we'll unravel the stories behind these stocks and uncover their dividend prospects. But it doesn't end with just finding the highest dividend yield. We'll delve deeper into understanding the financial health of these companies, their competitive landscapes, and the strategies they employ to pave the way for future growth, all essential ingredients for making informed investment decisions. Furthermore, we can't overlook the crucial interplay between dividend stocks and broader economic trends. Factors like interest rates, inflation, industry disruptions, and geopolitical events can profoundly impact these stocks. We'll explore how this dynamic dance between risk and reward requires a careful balance to ensure not just a steady income stream but also the potential for long-term appreciation of value. Our in-depth analysis, as we move forward, will dissect each of these top dividend stocks, scrutinizing their current yields, their resilience in the face of challenges, and the strategies they employ to maintain their dividend payments. This journey through the worlds of finance, energy, technology, and more will provide a panoramic view of the highest-paying dividend stocks in 2023, offering unparalleled insights into the companies and industries that have the potential to stand tall amidst the winds of change. But as with any investment opportunity, it's essential to remember the importance of considering these dividend stocks in the context of your own financial goals, risk tolerance, and the broader economic environment. While high dividend yields are undoubtedly enticing, they should be viewed as part of a comprehensive investment strategy, alongside diversification, understanding a company's financial health, and staying informed about industry trends. Striking the right balance through meticulous research and prudent decision-making can empower you to leverage these dividend stocks to enhance your portfolio's income potential while seeking long-term value. So let's dive right in and review our list of the highest-paying dividend stocks in 2023, a blend of opportunity, challenge, and resilience in the dynamic world of investing. Number 1. Lincoln National Corporation, stock ticker, LNC. Shares of Lincoln tanked after the Philadelphia area insurer announced third-quarter results that included a $2 billion write-down it blamed on updated guaranteed universal life insurance lapse assumptions in response to emerging experience, combined with recently validated external industry perspectives. In other words, it had to change assumptions about a series of issues in its life insurance business, including how long policyholders would retain their universal life coverage as they aged and how long they might live. The company's net income, let alone its cash flow, used to easily cover the $300 million it spent on dividends annually. But then, its yield used to be much lower when the stock price was at $75 a share in 2021, compared with around $26 now. With losses continuing into the first quarter of 2023, and the company cutting costs and suspending share buybacks, the dividend could land on a future list of cuttable expenses if Lincoln doesn't right its ship. On the bright side, the stock has risen since the first quarter earnings, as executives express confidence in Lincoln's ability to raise fresh capital and ride its profitable annuities unit as it refocuses its life insurance business. The current dividend yield is 6.9%. Number 2. Diamondback Energy Incorporated, stock ticker, FANG. This Texas-based oil and gas producer, operating in the Permian Basin, primarily specializes in fracking within the Wolfcamp and Spraberry shale formations. These formations are situated in the Midland Basin of the larger Delaware Basin. While the boom and bust of the oil and gas industry can lead to volatile payouts, Diamondback also owns midstream assets, including 770 miles of crude oil and natural gas gathering pipelines along with an integrated water system. Diamondback has an elevated trailing dividend due to special dividends paid out as oil and gas prices rose in 2022. It's also been growing its quarterly dividend from a 40-cent quarterly payout in the first half of 2021 to 80 cents per share in its most recent quarter. The company has been on the rise in July as it approaches its anticipated second quarter earnings release on July 31st. The current dividend yield is 7%. Number 3. AT&T Incorporated, stock ticker, T. AT&T stock has been another messy one, losing more than 25% in the last 12 months to push the yield up to 7.3%. A disastrous acquisition of Time Warner spun off at a loss in April of 2022, is one big reason for skepticism about the company's management. Like Verizon, it's also playing defense against T-Mobile US Incorporated, which doesn't pay a dividend as it bolsters its network and continues to integrate Sprint, which it bought in 2020. But AT&T spent about $10 billion on its dividend last year and had more than $35 billion in operating cash flow from continuing operations. It can sustain that payout for as long as executives want, barring a collapse in the wireless market. The company's current dividend yield is 7.3%. Number 4. Verizon Communications Incorporated, stock ticker, VZ. Verizon is in a dividend-friendly business since wireless phones generate lots of free cash flow. But its shares have been under consistent pressure because of competition from AT&T, also a top dividend payer, and the more growth-focused T-Mobile. Through July 7th, a 26% decline in the price of the company's shares over the previous year has inflated the dividend by 7.3%. And the stock drop made the total return on shares negative, but with the payout requiring less than half of last year's net income and earnings close to steady even as spending on 5G networks and other capital projects rises, there's little reason to suspect the dividend is at risk. However, the company has delayed stock buybacks in order to pay for new wireless licenses. For now, Wall Street's discussion is more about whether Verizon can hold its position than resume quick growth. The company's current dividend yield is 7.3%. Number 5. Coterra Energy Incorporated, stock ticker, CTRA. There are few stocks that better illustrate the volatility of oil company dividends than Houston-based Coterra, which paid out $1.99 billion to shareholders last year, up from just $159.4 million 2 years earlier. Certainly with $4.1 billion of 2022 net income, the money was there. But the quarterly payout dropped by $70 million in the first quarter this year, and if inflationary expectations break down, then the likely effect is that the dividend will move still lower. The company says that it mitigates its swings by investing across a spectrum of oil and gas assets, but energy businesses do remain correlated. It's rare for gasoline to move sharply up when natural gas prices move way down. Its dividends for the last 4 quarters work out to 7.9% of the current stock price. The stock is up around 10% this year and around 6% since this time last year. Natural gas prices are off more than 2/3 since last summer, and West Texas crude oil has dropped to around $75 a barrel from $110. The company's current dividend yield is 7.9%. Number 6. KeyCorp, stock ticker, KEY. This Ohio-based regional bank has gotten hammered this year on concerns about its exposure to commercial real estate, falling around 40% as markets speculate about how many office buildings will default on loans that come due and can't be refinanced at today's higher rates. That's why its yield has climbed all the way to 8%, the highest in the benchmark market index, according to CFRA data. Clearly, betting the retirement fund on KeyCorp last December wouldn't have been a good short-term idea, but that doesn't necessarily mean it's a bad investment. Only 0.2% of its loans were delinquent at the end of the first quarter, and the company said on its earnings call that it has only a small exposure to the office sector, which is by far the most at-risk part of the commercial real estate market as companies continue to let many employees work from home, at least part of the time. With earnings season approaching, watch to see whether the office loan portfolio holds up. If it does, KeyCorp can deliver both income and a nice capital gain. The same could be true of Detroit-based Comerica Incorporated and Rhode Island-based Citizens Financial Group Incorporated, which rank just outside the top 9 dividend payers. The company's dividend yield is 8%. Number 7. Altria Group Incorporated, stock ticker, MO. Death, taxes, and cigarette sales are all pretty certain concepts, which is one reason the maker of Marlboros and other tobacco products pays such a steady, high dividend. The company said in March that its strategy calls for it to remain the leading tobacco company at least through 2028, and to deliver mid-single-digit growth in earnings and dividends over that stretch. The company devoted almost all of its first quarter 2023 net income to paying its dividend, but the steady earnings growth predicted suggests that the payout is on solid ground. The company also has diversification plans that focus on products like smokeless tobacco and cannabis. It owns equity stakes in Anheuser-Busch InBev, the world's largest brewer, and Kronos Group Incorporated, a leading Canadian cannabinoid company. The company's dividend yield is 8.2%. Number 8. Devon Energy Corporation, stock ticker, DVN. Almost no company did more than Oklahoma-based Devon to popularize hydraulic fracking, the drilling technology that has driven down the cost of U.S. oil production and prices for both gasoline and natural gas since the early 2000s. Thanks to the war in Ukraine pushing prices back up, Devon made $6.04 billion last year and paid out $3.4 billion in dividends. But Devon's history shows that its dividend fluctuates with oil prices, so it's not a set-it-and-forget-it income stock. Recent quarterly payouts have been as low as 18 cents a share and as high as $1.27. If oil prices keep coming down, so might the dividends of Devon and other energy stocks on this list. The company's dividend yield is 8.8%. Number 9. Pioneer Natural Resources Company, stock ticker, PXD. Pioneer is the third largest oil producer in the Permian Basin, behind Chevron Corporation and ConocoPhillips. The company has performed well recently, beating Wall Street forecasts for the most recent quarter, and climbing high in mid-April on buyout talks with ExxonMobil Corporation. Thanks again to the base plus variable dividend plan, Pioneer was able to throw off big returns in 2022. But like the other energy producers on this list, its payout will shrink if oil prices decline. The company's dividend yield is 10.7%. In the ever-changing world of investing, dividend stocks hold a unique allure, promising consistent income alongside the potential for growth. As we conclude our exploration of these 9 must-buy high-yield dividend stocks for 2023, it's evident that each company faces its own unique challenges and opportunities. From Lincoln National Corporation, which seeks to regain its footing in the life insurance industry, to energy giants like Pioneer Natural Resources Company, navigating the volatility of oil prices, these stocks offer a mix of risk and reward. However, they also exemplify the resilience and adaptability that successful companies must possess in a dynamic market. As an investor, it's crucial to assess these dividend stocks in the context of your own financial goals, risk tolerance, and the broader economic environment. While high dividend yields appeal, they should be considered part of a broader investment strategy. Diversification, understanding a company's financial health, and staying informed about industry trends are all essential components of a well-rounded approach. With the right balance of research and prudent decision-making, these dividend stocks could play a valuable role in enhancing your portfolio's income potential while seeking long-term value. As is the case with any financial endeavor, the utmost importance lies in diligently conducting thorough research and analysis before making the decision to invest your hard-earned money, whether it's in purchasing stocks or venturing into the dynamic world of the market. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments. Also, check out our link below to see how you can get up to 16 free stocks to add to your investment portfolio today. Thanks for watching, and best of luck with your investments.